Hello everyone. Updates regarding India's October month auto sales and GST collection data. Second, how did US market close last Friday? And third, what is the outcome of the OPEC Plus countries meeting over the weekend? All this we are going to discuss in our regular pre-market report video for today, 3rd November 2025 for the Indian stock market in terms of Nifty and Bank Nifty. Before going into our regular stuff, I just want to convey one thing. I hope most viewers saw the Women's World Cup yesterday. Being an Indian woman, I'm really proud of our cricket team. My heartily wishes and congratulations. Anyway, moving on. First, about October month auto sales and GST collection. Yesterday, in the week ahead video itself, we discussed this in detail. Compared to last year, in the 2025 October month, India's wholesale car sales increased 17%. And except Hyundai, all other companies such as M&M, Tata Motors, Maruti Suzuki and Toyota all posted very decent double-digit growth rate. So today we could say all the auto stocks will be on focus. And furthermore, despite the GST 2.0 reform, which reduced the GST tax on hundreds of products, the Indian government's actual GST collection for the October month came very good, 1.96 lakh crore rupees, which is 5% higher compared to last year. Which means even though the rates came down, the volume of transactions increased significantly. Hence only it resulted in higher overall collection. So it's not just positive for auto sectors, it's also positive for FMCG and consumer durable sectors. Hence we could say all those sectors will be on focus. So I believe these two macros will be the major driving factors today in the Indian market, and in a way this is indicating that the consumption demand is very strong. Then second topic about last Friday's US market. Before the market opening, London Stock Exchange Group released the statement that so far 130 companies out of S&P 500 companies released their earnings, and most of them exceeded the analyst expectation. And the projected for this quarter S&P 500 companies profit to increase 13.8% compared to a year ago. This is very positive. In addition, because of the very good quarterly results, Amazon share price increased near 10%. Hence, in the end, broadly US market managed to close positive. Dow Jones was near flat, S&P 500 was up by 0.26% and Nasdaq increased 0.61%. In case of VIX, it increased 3% and moved closer to 17.5. Despite that, there is a negative global Q because of the Fed chairman's hawkish speech and all. Last Friday, the probability of December month rate cut came down to 65% from 72.8% on Thursday, and which was 91.7% a week ago. Hence, it is not a good sentiment. Just for info, at present, US future market is trading mild positive like 0.2 to 0.3% on top of the Friday's closing. Then third topic about the OPEC Plus countries meeting output. Yesterday, OPEC Plus countries had their virtual meeting, and as an output, they agreed for the December month Saudi Arabia to increase the oil production by 1,37,000 barrels per day, which is way less than what market was expecting. So at the time of this video, oil price increased by near 1%, Brent crude trading at 65 US dollars per barrel and WTI crude trading near 61.5 US dollars per barrel. In a way, this is negative for oil marketing companies like IOC, BPCL, HPCL, but it's positive for oil producers like ONGC and Reliance. So we need to watch how oil stocks react today. Now regarding Indian ADR, as it is, all of them closed significantly negative. Especially HDFC Bank ADR and ICICI Bank ADR down 1.5%, but it was more or less in line with the Indian market since SEBI is asking NSE and BSE to implement the index weightage cap on top banking stocks. So for now, there is no fresh negative arbitrage on banking stocks. Whereas on the IT ADR, because of the reduction in the rate cut probability, it's showing fresh 1% negative arbitrage. And Reliance GDR also showing mild negative arbitrage difference. In line with that ADR negativity, GIFT Nifty on Saturday morning fell and traded near 25,800 mark. Equating that with the spot market, it's indicating the gap down opening of 50 to 100 points based on the premium readjustment. Here, please note the Saturday morning closing GIFT Nifty doesn't include the auto sales data and GST collection. So there is a high possibility that the gap down opening might reduce or even turn into flat opening if the market reacts positive to the auto sales and GST collection. As a summary, India's October month auto sales and GST collection is very good. Both are very positive for domestic consumption story. US market closed positive and US future market also trading positive. So mostly it appears all good. But for now, Indian ADR and GIFT Nifty is not indicating that, and this December rate cut probability reduction, which is negative for the IT stocks. So domestically, things are positive, but globally, sentiment is mixed. Moving on about institution, there was a massive selling in the cash market. On last Friday, FII net sold for massive 6,800 crore rupees and DI equally net bought for 7,100 crore rupees. And coming to derivative market participant wise open interest analysis, for the second session in a row, significant future open interest buildup increased 5% and further shifted to call dominated positioning. 27% new call option open interest were added and 9.5% new put option open interest were added. So the PCR ratio fell from 0.77 to 0.66. However, stance-wise, no major change in the total outstanding index option open interest, client having net 9.5% open interest favoring the bullish position, whereas FII and property traders having net 4.2% and net 4.6% open interest respectively favoring the bearish position. Similarly, in the index future, FII and proprietary traders having 84% and 53% of their open interest on the short side, whereas client having 66% of their open interest on the long side. Then, as per stock open interest, Manappuram Finance, Emphasis, Bandhan Bank, Dauber, Kotak Bank, Maruti Suzuki, ICICI Bank, UPL, and Mankind Pharma are some of the 109 stocks that got an increase in open interest with a negative close, which indicates the short buildup. On the other hand, Indian Bank, Shriram Finance, BSE, Inox Wind, IGL, SBI, and Divi's Lab are some of the 33 stocks that got an increase in open interest with a positive price close, which means these stocks got the long build-up. About the things to look out, earnings-wise, Ambuja Cements, Airtel, Power Grid, and Titan are scheduled to release their results. So in addition to auto sector, we could say cement, telecom, and consumer sectors also will be on focus. Macro-wise, early morning Chinese PMI data is due. Then during our market time at 10:30 a.m., India's manufacturing PMI data, and in the afternoon, France, Germany, and whole Europe manufacturing PMI data is scheduled to release. And in the night, US manufacturing PMI data are the important things we need to keep an eye out today. Coming to technical, last Friday, Nifty opened lower, but immediately it rebounded and climbed up to near 25,950. However, it could not sustain those higher level for long and dropped throughout the session, then closed at around 25,700. Thus, on the daily chart, Nifty formed a long bearish candle with an upper shadow, indicating selling pressure at higher level. In addition, it fell below its 10-day exponential moving average, even though it still held above 20, 50, and 100 exponential moving average, and also fell below 23.6% Fibonacci retracement of its October rally. Furthermore, RSI at 57 sustained a bearish crossover, and MACD is also on the verge of a negative crossover, both indicating short-term caution. However, if we see the overall, the trend remains positive as long as Nifty defends the 25,500 to 25,400 support zone, whereas holding above the level despite the current nervousness and consolidation could push the Nifty back towards 25,900 to 26,000, followed by a hurdle at 26,100. In case of Bank Nifty, it opened 90 points gap down but immediately rebounded and increased to 58,250. However, it could not sustain and dropped throughout the session, then closed below 58,000. Thus, on the daily chart, similar to Nifty, Bank Nifty also formed a bearish candle with a long upper shadow, indicating weakness at higher level. In addition, it also fell below its 10-day moving average, even though it continues to trade comfortably above 20, 50, and 100-day moving average. Furthermore, RSI at 62 showed a bearish crossover, while MACD is nearing a negative crossover, both indicating short-term weakness. Hence, on the downside, immediate support is at 57,630 and a break below this level could extend the weakness towards 57,000, while the major resistance for Bank Nifty is at around 58,580. Regarding the options front, the maximum call option openness was at 26,000 strike, followed by 25,900 and 26,100, with maximum new call option rating at 25,800, 25,900 and 26,000 strike. On the put side, the maximum open interest was at 25,700 strike, followed by 25,500 and 25,800, with the maximum new put option rating at 25,700, 25,800 and 25,750 strike. Thus, from options data, it indicates that Nifty is expected to remain in 25,500 to 26,100 range in the short term. So that's all in this video. Hope you all got some useful information. Please consider subscribing to the channel and liking the video so that it will help me beat the YouTube algorithm and also motivate me to do more. Please don't make any investment based on this, as I'm not a SEBI registered advisor. I'm doing this for me and viewers' educational purpose only. Thanks for watching.